Welcome to the Daily Trader. I'm Tom White, filling in for Kevin Hinks today. Hey, Santa Claus, you might be showing up to town. Stocks are bouncing today, and this is on the back of some data that we received. CPI converted to a 2-month reflection here. This is the first data point that we've gotten in a couple months here, but CPI came in far below expectations. A headline, year over year, 2.7%. That's below the expectations of a 3.1% year over year gain. And core, which is the metric that I think the Fed focuses more on, came in at 2.6% year over year, far below the 3% that was estimated by Wall Street. What does that mean for stocks? Well, it's a positive read as inflation fears have been quelled a little bit. We've been waiting for that Santa Claus rally, maybe getting a little bit of a bump on that today. Because this October CPI was canceled, Thursday's report did not have all the usual data in there in a typical CPI release, but the BLS said it was unable to retroactively collect that October data. But economists may be hesitant to read too much into this report as the start of the downward trend in inflation because of the lack of October comparison data in the report. The tame CPI may reinforce that the Fed is focused on protecting the unemployment market a little bit more, and means the Fed put may now be in place for the economy. Jobs market has been weak, and we got some jobs data also. Weekly jobless claims came in a little bit less than expected. They dropped 13,000 from the prior week to 224,000 for the week ended December 13th. Claims, remember, last week, claims spiked 45,000 to about 237,000. That's an upgrade from the 236 in the December 6th week. That's the largest jump since 2020, but pulling back now. The 4-week moving average for jobless claims inched up to 217,500. And continuing claims rebounded a little bit there, 67,000 to 1.897 million from the December 6th week. So some positive data on CPI, weaker than expected, and the jobs market remains robust on a week-to-week basis, but still softening, giving a little bit of a lift and a break of that forward session losing streak that we've had for the S&P 500 and the Dow.